Hello and welcome. It is the 26th day of March 2019. My name is Derek. All bets, trades of the like within each his own risk and their own reward. Okay, let's talk about gold. Let's talk about silver. And I'm going to do it in the Canadian fiat for today's video. So, what are some of the key things that I notice amongst this monthly term time frame? One of them is that it just might be nicer just to scale it so that these numbers are out of the way because the top areas are going to be very important with this current resistance field. And the resistance in itself, well, that's a significant area. But even one of the big ones is one that isn't really too noticeable on here, or why isn't something bigger noticeable, which is right in here. As that was back in 2008. And the spot where gold went from 1,000 to like 700. Here, gold went from like 1,000 to like 800. Only went down. It didn't go down an extra 100. Well, that's because the Canadian currency versus the U.S. currency, or yeah, Canada-U.S. cross is a big reason for that. Overall, just a beautiful uptrend that supported within the 18 highs mostly. This was a support in the lows. These two in here were within the closes, not shown. This one, and the lift off here was all from the 18 of highs. A failure to continue the trend on the 2012 period. It went sideways. And in this case, it's right back at that area again. It's now had a lot of resistance tests. And we can make a case for an ascending hiccuping triangle. I can't do a hiccup just because I want to. And the hiccup is this interesting situation in here. For in drawing a trend, and I'm not going to draw one, it should just be obviously shown. I'm going to draw whatever. I'm not going to draw a proper one of straight line. And then you go proper. The best way to do it is in a spreadsheet or with a calculator, literally. And then you can do it on a mathematical number from there. And the reason why I said spreadsheet is because I would use formulas within the actual numbers, which is why literally it's a calculator. So there's a hiccup. Bottom line is it's just got to get above the resistance. I don't need to put a line in there because the green line is already shown because it's there right now. Within that level of resistance. From this move in here, it's had this up month after the last one of the year last year, December 2018. January, February, and now currently close to the end of March. It is just making this go sideways. And I'm going to pause the tape and see if I can just show this really good. But it's just a little moving around in here. And among it, we have from this rally, and it followed 2 good months before then, after half a year, with the last 4 being pretty decent sized red candles. Well, nothing, just normal red moves, and don't get much comparison before. But how all 3 of these so far are showing. It's pausing, holding this gain. And the best we're going to take a look at it is just look at this. Or maybe look at this more clearly, more candles. But what we can see just among this point, and you do that by switching just other time frames. And in viewing the weekly, we can see this rally that ended the year very clearly now. As it got up to pretty much this line, we got 1762 almost. The high is 1762 almost. In fact, it's 0.612. It is 0.056. 5.5 cents, a little more than this exact high. And from that exact high, a little bit of a pullback, and I really like to say a little bit because it didn't even make the 18 highs. And well, everybody looks at it, so it's pretty superior. And I'm sarcastic when everybody looks at it because like nobody does. And I'm talking about the Canadian chart, not the U.S. one as well. This high is a pierce above, but in my book it's a matching high. As we are seeing now, some more tests amongst this key level on the daily chart. Why did it? There we go. What we're seeing in here is from this last down move, it did go below the 18. So therefore, after this, okay, there's one more key level because from the high, what's your next support area? Well, this 18 band, and it did so in here, and then it left it. Okay, so we're leaving the band. Well, where did we come from? Well, we came from this low, and we came from this low, so it pierced above this one in here. So as we come up to this, that showed no signs of this correctionary phase being a resistance area one. For after hitting this, it went down, but it regained it. So at one point on this day, there was a red candle decently sized down to this low because it definitely opened here and it was in there. So on that day, the buyers came in, brought it back up. But at that point, in here, you don't know if it's going to be resistance or not. You know if it is, we've established more so on the support, breaking through, filling empty space. But when watching it on a day-by-day level, oh, next day it comes up to the 18. Oh, still could be resistance in here. And then red candle down. It is. 18's in a flattening mode. It was starting to decline. The newly declining and not that good of a rate of a decline is losing it. It's starting to go flat. And there we can see the flattening out, supporting amongst this area. More neutrality within it. Red candle down, but it supports the lows. Continuation amongst it. It's it's flat, barely tending to the downside, as we can see at this point with the little bit of decline in here. That's it, though, just a little bit. Then the next day ended that. We can see the 18 lows start to flatten, 18 highs now getting firmly flat, and multiple resistance tests. Next day, and there's where the strength pattern shows. Okay. No move out of this 18 lows area, consolidating this higher level, and then you get the non-surprise. Okay. When you see this, all these higher lows, well, that's the first step in knowing that the 18 lows is going to start to rise. You're at an area where the more likely you or more often you test support or resistance, the more likely you take it out. And there we have it. So now the 18 lows starting to go higher, as is the highs as well, with the nice move that it had. It did establish an area of resistance not seen in quite some time because the previous mark was 17, almost 1749. And then it retested, came back to that level. Now the 18 highs and the lows firmly starting to rise. You've now spent 2 days staying above that point, but more importantly, after this move, you held and stayed above this key level. But not only that, that was just what you wanted to do on the at least section. The fact that you were able to extend the gains and close them is most certainly a very big indicator. And then to go further, to extend the gains, match it up towards this previous level of resistance, starting to get a little overextended, but that's what this 18 average is always for. There's a little bit of a correction, not big enough to justify using this at least as its indicator or its yes or no technicality. A price correction isn't sufficient enough, and that's where it stands now. Enough going like this through time? Well, then, of course, yes, it would be a combination of price and a few days that would give it to its correctionary spread. But if it were to just start going up here, you have to give the benefit of the doubt to the buyers, and you're at a situation where if you break this level of resistance, it could be just that very, very, very interesting because this has a lot of meaning towards the long-term charts. Oftentimes you're going to look at this and it's all, the daily chart's all hogwash right now. Most nows, I'll state, to what the monthly charts and even the weekly charts are showing. As is the 5-minute charts hogwash to what the daily charts. Is today an exception? And when looking at this, yeah, I would have to say it's very choppy in here. Yeah, it is the exception. I mean, this is, if you're trading on the daily term time frame, what's going on in the 5 doesn't mean much to you. But if you're trading on the monthly term time frame, then what's going on in the daily term means a whole heck of a lot. Now, silver shares an interesting story And in watching a video this morning on Mike Maloney's channel, I'm just, oh my goodness, this just makes so much frickin' sense now. And I guess I could be thinking, watch it whenever the time is ready, and I don't know when that time is. I'll get to that soon. But as far as this weekly chart, it's got nothing in the similariness of gold in that, well, gold's having a multiple hit of major all-time high resistance levels, and silver's hanging in there around 20 and 2/3 CAD. From its down move, it's had one leg lower in the decline. You could say there's three overall, even four, because we had the first one was this one, but I'm not counting that in the decline. That was in a bull market. Even this one happened in a bull market, but it did establish a level of support. Well, here's the first decline right here, and the only decline really, which really comes down to here, but overall this is a failed breakdown. Oftentimes where failed moves lower brings a fast move to the opposite side. Well, not this time. What happened here was stage 1, band flattening out. Stage 2, established level of resistance. Stage 3, come back to the band, and it attempted to possibly break out here. That was back in the about 2 years ago. Failed to do and such. And then it was looking to break down. Okay, well, maybe it's not going to attempt to do stage number 4. Major level of supports established at extreme microscopic volatility for quite some time, starting July of 2017 and ending, the last one was June of 2018, pretty much a year, exactly 12 months. And then you had 2 red candles down and then 3 more months of extreme microscopic volatility. And then a green candle, nice up month in November. I was going to say December. It was December, yeah, December. Right? My brain is better than my knowledge of what my line here was. Yes, it was December. Then the 3 months now of extreme microscopic volatility amongst the 18 highs. But overall, this is entire sideways range. It is still, as far as I'm concerned, in stage number 3, come back to the band, or its correctionary move after establishing the highs, because it hasn't broken down yet either. If it resists this and starts to do it, then yeah, we're having another leg lower from this breakdown and what would be an extremely long correction. But I don't think it's going to break down, at least anything more than just that, like a V-shape move lower or U-shape or something of a short-term level of the lower prices if something were to occur. And I wouldn't be surprised if that happened either. Especially if I were to see something like this and stay for a while, then like do like a reverse Bart Simpson or Homer or Simpson head formation, which is just take a. It just means it goes straight up or reverse down, and then it just stays at that level for whatever period of time, and then just goes right back. That's just whatever, however you want to say a noun particular to state such a fact. And the reason why is because the big buyers are going to want to do that big buying then. And I don't know. This might just be theoretical theory. You're trying to use such. And let's just change the screen a bit so that I got stuff to draw on and go like that. Excellent. Back in 2008, financial crisis, JP Morgan took over essentially the market movers for the silver market anyway. I'm not too sure about gold, but probably as well. So JPM. Shortly thereafter that, they started stockpiling silver. And in such, as silver was going down and going sideways, their portfolio of their physical holdings kept going higher. Still going high. I haven't checked, and I've only seen a few pieces here and there. And I think to myself, okay, if they want to be an aggressive buyer of the physical, and they have the ability to influence the price, do you think they want to buy with prices up here at 141? Or buy the prices at 41? No, they don't want to buy at 41. How about 30? They're not going 30. But for years, it's been around $15, $16. The price of silver in US dollars, that is. And it was mentioned that the average cost to produce an ounce of silver is pretty much around that. At least that's the video I was watching from Mike Maloney. How it costs like 15 bucks, 15 and a half, something of that nature. And I'm thinking at that time, okay, this whole time they've been buying. And of course, this is the Canadian dollar. US dollar has been cheaper than that. Why would they want to spend the higher prices? But at some point, if they want the market to go up, they be JP Morgan, I wonder how much influence they would have towards such an event. And if they stockpile a large amount, that might be something they want to have happen as well. There used to be a time about, I think it was, this just comes to my mind right now. I wasn't planning on saying this when making this video. Buy silver, crash JP Morgan. I even think I did a small piece on that too at one point. And I find it very, very interesting now how times have changed so much. That this was back in here before this bull run even occurred. This run has went higher. It retested the 1980 highs. In this case, the high was 47 and a third, which was lower than it was in the States, which was almost 50. But it was $50 in 1980 in the US. It would have been like, geez, like 65 or 70 maybe in Canada. There was a pretty decent exchange rate, I think, back in 1980, which would have meant the price being worth a lot more. This was one of the rare examples or times in the lifetime of the US Canadian cross, since it's been pretty much a dollar backed system, that the Canadian dollar had higher worth and such. But in such, that means it didn't fall as much in Canadian currency, as it's been holding this $18, $19 level the entire time since 2013. Almost 6 years now of this sideways movements, which it's done a lot longer than 6 years before. The longest I think it did was 25 years. Or 1982 might have been the start to about 2004. 22 years. But, like 1979, I wouldn't be surprised when there comes a time, I don't know when, but this thing is just going to, well, lift off, I think, to some pretty high destinations. So when we look at future years from now, I wouldn't be surprised when looking at a chart from, I was trying to scale it so it works well. Yep. So if we're looking at a chart in 2029, that it's normal when you're looking at the 2010 levels, it's down here. And we have price movement in this time in here. And all because of, well, I'm not going to say just because, I mean, that, no, not all because. It would be in the sense that it's going to have some straight up moves where it wouldn't be a surprise to see it do something like this, reach in here, and do it in like 6 of these months, or 8, or a year, or 14 months, 2 years. And 2 years is starting to now talk about a decent amount of time. That's almost 25 candles on the monthly. And just have like just phenomenal amounts of gains, and just wow type of times. But you might have to go through a lot of significant waiting time, and that has been the case right now. And a couple other interesting things of note too. Some people say stuff like 100-ounce bars are a problem if you are trying to sell them at, say, well, I see $600 highlighted. Well, that's a little over half a million. 60,000. Yeah, 60,000. What am I thinking? 60,000. First of all, 60,000 isn't that much money overall, although it's pretty good. And when you're talking about even having several of them, that's a good problem to have when you have value that high. But of course, I think 100-ounce bars are an amazing idea when your net worth of silver is worth several thousand. You would probably want to have a good variety of them. And when you start off with 1 ounce and then you move into 10 ounces and then maybe you go into the kilos, and then when you get into kilos, you're probably into the one. You probably maybe over the 1,000 or even 800-ounce number, and then you get into like 1,500 to 1,400-ounce ownership, and yep, yeah. Say you're at 15. Well, now go to 16. Buy yourself a 100, and then months and years go by. Maybe in cryptocurrencies they go way up, and I'm hoping that does happen where silver market prices stays hopefully below here. I don't mind prices going up in this little area, but if they stay here and crypto prices do well, I mean, this is just where silver's super cheap to buy. Anything in here. And it's not too expensive below 100. I believe that if you can buy silver for under $100 an ounce Canadian, that's not that bad. Now when I say that, I mean that literally, but realistically, because you obviously can get it under 100 an ounce. You can get it under $50 an ounce. You can get it under 30. And if you really want it cheap enough, you can get it under 24. Although that's really starting to push it at this stage, below that. So to me, just as far as accumulation phase, I'm a believer when I see something with price objectives to go into these types of areas, that yeah, this is magnificent buy. Anything where these below where this line is, this is where magnificent buy is. Anything below where this in this range here, this is a pretty decent area to buy. And then in here, well, the last ride, the last shots, because breaking it above that, accumulation mode is over. Although, getting up here, it's going to keep going. That means distribution mode is coming into play. Of course, world conditions and your own personal portfolio conditions will determine how that would be done towards such, to which levels, and so on and so forth. As far as easiness to sell when markets are going up, oh, it's easier than it is when markets go down. Because the reason why they're going up is because people want to buy. And when people want to buy and you want to sell, it just works out. That's just good dynamics to have in your favor. And now let's finish this off within the gold to silver ratio. And I'm going to do the ratio of the two from the Canadian dollar. So I'm going to take the Canadian gold price and divide it by the Canadian silver price for this one. Okay, so it's high. I'm going to do this again. Is it possible it goes way up here? Well, I suppose. I don't think it will. We do see a spot where it looks like it's breaking out, going higher. But for me, if that's the case, I'll be looking and saying, man, I own a lot more silver than I do gold. And well, I've been thinking lately, do I buy an ounce of gold right now just for something to do, just for this purpose? I could sell it later if it goes up, but I'm not going to. Rather, I think I would rather wait for when it's time to go lower, it will. For the one thing about just taking one market and dividing it by another, taking two cryptos against each other, like Dash and Ethereum, Litecoin and Ethereum, taking two stocks together, say AT&T and T and maybe I don't know, Shell, gasoline, I don't know, just two random codes. Taking gold and silver, just putting the two, that you're probably going to get a lot of choppy-ish kind of action overall. And I'm seeing a lot of that. I don't see the entire amount given that this only goes back to the late 1990s. But it is, to me, overdue at this upper end as it is anyway. That doesn't mean it can't have another leg higher, and a noticeable one because, at least as of the data shown in here, there has been now 4 different hits amongst the upper area. But when it's ready to come a little lower, this is where I'm going to start distribution. Or accumulation, I guess, for what this market would be. Meaning, I will buy, I guess would be gold. Silver would be the base currency when it's the second number. I would be buying gold in here. But that would be the start. What do you buy gold with? Well, of course, the other one, silver. So where I take just a small amount of the silver that I own, turn it into gold. And just a small amount, maybe an ounce or 20 or however many. Not an ounce. Maybe an ounce of gold, but not an ounce of silver. And then when it goes lower, and I do think it will, because again, I can't show you data from before, but I know where it's been before. The lowest that this has been, to my knowledge, is down in this area here, at least from 1980. 850 divided by 50. So 16, maybe around in here. Therefore, this point in here is medium or accumulation on this distribution for silver. And then it gets really, really fun. I guess it'd be 2 levels even below that, because I do have a belief that it can go really, really low. So there'd be 2 more levels after this. The next level is, oh my goodness, it's below 10. Roughly around here. That is aggressive buying, but not super. And then down towards here. Breaking like 2.5, 3. That's when I probably realize that I'm hoping I will sell it down, my silver that is, so that I own at that point. And that point, we're talking not 2018, of course. Obviously, we can't not. I'm hoping like 10 years from now, or 7 or 5 years from now, that a spot like that happens, and I sell a whole bunch of silver, but mainly I'm getting a whole bunch of gold more than anything. And I have, after I'm done all of that, the amount of silver I own today. And I'd have to sell a lot. No matter what I own, I'd be selling a lot. I would definitely be owning, I would guess, 15%, 10% of what I owned at my highest peak. Because of all the selling of silver I'd be doing as it was doing this. But I've thought in my head, okay, if I can come over around here and find a way to maybe turn 1,000 ounces of silver for like 3 to 500 ounces of gold. Okay, and I've thought this many times before, many times before. 300 to 500 ounces of gold. I'd be guessing that this amazing, unusual event, and it might not even happen, but if it does, of course, it would just be one of those spectacular ones because I think it would go right back up to here. And then with that 500 or so ounces of gold that I bought here, and maybe another 100 or so in here, whatever, couple hundred, maybe I'd take about 300 of those ounces when it's 10 to 1 and buy another 3,000 ounces of so. 3,500 ounces, 4,000 ounces of silver. Something like that. And maybe those numbers will be bigger because now that I'm thinking about it, I think at this stage, at least more in the number particularity because I haven't looked at those in depth features. Rather, when those times are serious, you say to yourself, when you get to each level, and you can plan this out with a notepad and a computer spreadsheet or any of those types of things. If I sell this many, I'll have this many for this run. If I sell this many, I'll have this many for this run. If I sell that many, I'll have this many here. And if it gets to that point, I'm going to have this much at one, and I'm not even going to plan for anything lower, but if it gets there, holy crap. Now, I actually believe that the fair ratio is actually closer to 8 to 9 to 1, and that's really old information for me. I haven't seen anything to update those numbers on my view, as I'm looking at that of, well, how much of it's mined per year, how much of it is used, and then it's supplied. But when I look at factors like gold being really taken out of the ground and then stored. I mean, it doesn't do well of it, but it collects dust. It's just it doesn't literally collect dust. I don't think. But it just you sit it, you hold it kind of deal. And silver, not a good percentage of it is in that form. A lot of it is actually being used, and they're taking from the reserve supply. And factors like that with markets movements always going way higher and lower than what fair value is. And to think that a ratio going to 1 to 1 or 1.5 or 2 to 1 is a little extreme would, yeah, be so true. But that's what these markets have done in the past, and I think will continue to do in the future. Okay. Thank you for tuning in, and have yourself a great day. Bye bye.